Hello again, traders. Doing Trade once again from DFX, Swing Trading Mentoring. Going to be taking a look at one of the 5 challenges that face us when it comes to trading. This involves placing our stop loss at the strongest areas that will ensure that we're able to stay in the trade until our trading target has been hit. Now, as part of my trading approach, what I do is to use the daily chart and the forward chart to identify market direction. And once a trading opportunity has been identified, entry then takes place using the signals and patterns provided by the forward chart. Now, no trade is complete without a strong stop loss area. And so to protect the trade, what I do is to also use a strong area on the forward chart that is strong enough and far enough away from entry that will ensure that I'm able to withstand the temporary pullbacks that take place in the market and protect the trade until our trading target has been hit. Now, this concept of, or the challenge of stop loss placement represents what I think are the 5 main challenges that face us when it comes to trading in the currency market. So the first one involves ensuring that we're able to accurately draw the market setup that we're trading. The second involves ensuring that we're trading the best signal to avoid false signals and unexpected reversals. The third one, which is what we're going to be looking at, involves determining and distinguishing between the weak areas and the strong stop loss areas in the market. The fourth one involves ensuring that we make the right decision in terms of where we exit the trade, whether we exit the trade just ahead of resistance or support, or whether we can actually exit the trade at these areas. And the 5th challenge involves determining our pip targets, which is one of the most challenging things that we can also face in the currency market, because we don't want to be aiming too low, nor do we want to be aiming too high in terms of our pip targets. Because of course, aiming too low, we would shortchange ourselves in terms of the profit potential, while at the same time we don't want to aim too high in terms of pip targets, because we do not want to be holding on to the trade for too long. Because the longer that we hold on to the trade, the more we expose our trading setup on our trading positions to unexpected market volatility and reversals. So these are the 5 challenges that face us, and the one that we're going to be taking a look at here is that of stop loss placement. Now, the trade that I'm going to be taking a look at to illustrate this concept of stop loss placement comes from the one that was done recently on the EUR Japanese yen on my live account with FX Pro, where I captured a trading gain of 53 pips, which represented a rate of return of 2.97%, which, as you can see, was captured in just over 12 hours. And these are the types of rate of return targets that I aim for each trade. And if we can capture these types of trading gains per trade on a regular basis each month, then these are the types of returns that are possible for us over both the short term as well as over the long term. Very importantly, when it comes to my trading and my analysis, I actually use 2 trading platforms. I use FXCM because the charts are found to be the clearest in terms of analysis and entry signals and market direction. However, when it comes to my live trades, I actually prefer to use FX Pro for 2 main reasons. The first is that you can actually see the risk and reward values in percentage terms for the trade that you're about to make, which I think is very important to ensure that you're able to stay within the risk to reward parameters that you have set for your trading. And the second reason is that you can actually receive email alerts. And what this does is that it prevents us from watching our trade after we've entered the market, which, as you know, can lead to a lot of bad habits and self-sabotaging behavior. So to avoid the temptation of monitoring our trade and closing our trades too early, it is very highly recommended that you get a trading platform, any trading platform, that allows you to receive email alerts that reduces this temptation, which, as you can know, can compromise your long-term profitability. Nevertheless, whenever a trading opportunity has been identified, entry takes place both on this FXCM demo account that I use, as well as this FX Pro live account, to essentially show you that there's no real difference between trading on a demo account and trading on a live account, so long as the strategy is profitable and reliable enough that will be sustainable over the long term. Now here you can see the setup on the daily chart of the Euro Japanese yen, where what was taking place was that the market was breaking out of this consolidation setup that was formed, that took the form of a pennant setup. So what was taking place was that the market was continuing the breakout from this setup, following the initial breakout and the pullback that tested the broken support boundary, which led to this U-turn and a strong evening star that indicated the continuation of the breakout bearish. Coinciding with the formation of that signal was this bear cone setup, which was formed on the 4-hour chart of this pair. So here you can see that the market had broke below this uptrend line, testing the broken support boundary of the pennant on the daily chart and forming this strong bear cone setup to indicate the start of a movement bearish. So this was a setup that was identified as a trading opportunity. And as you can see here, the market continued as expected to hit the support target and provide us with a trading gain, both on the FXCM demo account as well as on my live account with FX Pro. So I'm going to be using this trade example to show you one of the areas where you can place your stop loss that will ensure that you're able to withstand temporary pullbacks until your trading target has been hit. So stop losses are very important in trading the currency market, because one of the most frustrating things that we can have happen to us is for us to be stopped out too early in the trade and then see the market continue in the direction as we had predicted and hit our trading target as we had captured. But instead of providing us with a trading gain, we would instead be holding on to a trading loss because of the early stop loss that happened to us. So to ensure that we're able to avoid this as much as possible, it is very important to be able to identify the strongest areas that are both strong enough and far enough away from our entry to protect our trade against temporary pullbacks. Now, this was what was facing us when we saw the setup on the 4-hour chart, where the market had clearly formed this bear cone setup. And so the challenge is determining, given this strong setup and this strong signal, where would be the best place to place our stop loss to protect the trade against any potential temporary pullbacks. Now, when it comes to downtrends, one of the first things that we do is identify areas of resistance that will allow us to draw downtrend lines. So here you can see that this would have been the first one that would have been formed as part of this new trend direction. And this would have been followed by this second resistance area that was formed as part of the right tip of the bear cone setup. Now, from the trading manual, what you will see described is the way in which we can draw trend lines as part of a downtrend. So what we do is identify the areas of resistance that are formed as part of the movement bearish and connect these areas of resistance with a line that would provide us with a trend line that will help us to better identify market direction and to also use as a stop loss area. So once the downtrend line has been identified and it is strong enough, then this is one of the areas that we can use to protect our trade until our trading target has been hit. So here you can see on the 4-hour chart where what was done was to use this area, use these two resistance points to draw the downtrend line, which would provide us with an area to place our stop loss. So as you can see, another possibility in terms of a stop loss placement would have been to place our stop loss at this high or at the high at this area here. But if we can draw a trend line that is strong enough, then we can also use that as a stop loss area as well that can be closer to our entry signal. So while these two could have been strong stop loss areas, they would have required too large of a stop loss for this type of setup. So if we can get a strong area, a strong stop loss that is closer to our entry, then that would be a viable option as well to protect our trade. So as you can see, this was the entry signal, this candle here, and you can notice that the market pulled back temporarily. So if we had placed our stop loss anywhere here, then we would have been stopped out, or the market would have come very close to our stop loss before U-turning. So to avoid any of those situations, the best you want to place a stop loss at an area that is far enough, and as you can see here, this was definitely far enough from our entry. And as you can see, the market never approached the trend line to threaten the stop loss. So the stop loss was placed at 121.05, and the market pulled back to as high as 120.75. So 30 pip distance between the pullback area and our stop loss, which gave us enough room to protect the trade. So the market eventually U-turned and hit our trading target and provided us with a trading gain. And so while this was happening, our stop loss was strong enough and far enough away to protect our trade until the trading target was hit. So that was just a brief and a quick example of one of the areas where we can place our stop loss to ensure that we're able to stay in the trade until our trading target has been hit. As I said before, resistance areas offer strong areas to protect our trade. But if we can identify a strong downtrend line as well, then we can use that area above the trend line to protect our trade and give us a smaller stop loss that is closer to our entry, while at the same time being far enough away that will allow us to stay in the trade and withstand temporary pullbacks until our trading target has been hit. So until next time, traders, if you have any questions, you can let me know by emailing me at shepherdduane@gmail.com. You can also find me on Facebook, babyfips.com, using the same handle, DRFX Trading, as well as on Twitter at worldwide876. And of course, you can check out my website, swingtradingmentor.com, as well as my Instagram at DRFX Trading Boss, where you can find a full description of the trading methodology that I use. So until next time, traders, happy trading.